All right, everyone. Welcome to today's webinar. My name is Jerry D'Ambrosio. Glad to be here with you folks today. I hope everybody's doing well. I just want to do a quick sound check just to make sure everybody can hear me okay and can see my screen. If you guys don't mind, just use the chat box to let me know that you can hear me. There we go. Ricardo says yes. Tarsem says ready to learn. I love it. Love the enthusiasm. Daryl says okay. Good. Well, we're ready to go. I do want to welcome everybody joining us via YouTube as well. And I do want to let you guys know that I do have my good buddy, Mr. Todd Schaefer, in the background. He'll answer any questions that you guys have along the way. I'll try to answer some along the way. I've got a ton of content to cover here, but I will save some time at the very end to answer some of the more common questions. So, but if you feel like you really need an answer, just shoot it in the chat box, and Todd will be there again in the background to answer any questions that you have. All right, pretty good turnout here for a Thursday afternoon. It's 4:30 here on the East Coast. Not a lot of familiar names as well that are chatting in and that are joining us here today. So I hope you guys are ready to go. A couple of things I would ask of you guys first. We call them the three gets. Number one, grab a pen, a piece of paper. Obviously, you want to grab something to drink, you can do that. But somebody out there, please grab a pen and a piece of paper. I'm going to ask for your participation in a little bit. You can, of course, take notes as well, but I will ask you guys to write a few things down. So that's the first thing I would ask. Grab a pen and a piece of paper. Number two, get rid of any distractions. Anytime I listen to a webinar, I like to close the door, tell my wife, honey, I won't be available for the next hour. I like to keep my cell phone on the other side of the room because you guys are here and ready to learn, right? I really want to commend you for that. You're taking time out of your day to better yourselves as traders. The title of this webinar is How to Trade Like the Pros. So, you're probably under the impression that I'm going to teach you something, right? Teach you a little bit about how professional traders trade, a little bit about how they think, which is just as important, I think, than the technique that's being used. You got to get yourself in the right mindset, and that's what we're going to do today. You're going to learn 5 common principles professional traders follow. I'm going to teach you guys an extremely easy and effective short-term trading strategy, and I really emphasize short-term, okay? This is not your retirement approach portfolio, okay? This is a swing trading, rather short-term system. And then I'll finish off with showing you how to quickly and easily identify the best trades. Now, I really want you guys to stick with me to the end. If you stick with me to the end, and we're going to be together for about an hour, so if you stay with me to the end, I'll share with you a copy of today's slides. Just somebody remind me at the end. So about, what time, 4:30, about 20 after 5 Eastern time, about 50 minutes from now, just say, hey, Jerry, don't forget the slides, and I'll put them in the handout section of your GoToMeeting control panel. Okay, again, just somebody remind me at the end, and I'll go ahead and do that. All right, so let's start off by talking about what makes a pro a pro. So what are the qualities that separates these men and women from the average retail investor? And this segment here is all about getting your mind right, getting you in the correct mindset. Because like I said, this isn't your retirement approach. This isn't a buy and hold retirement approach where fundamental valuation, earnings growth rate, relative safety, though we're not really looking at those type of indicators all that much. This is for the capital that you have set aside to trade a little bit more actively. We hope you're doing that. We encourage you to do that. So for example, you have your retirement portfolio, right? And that's where your core holdings are located. We have a few great option courses here, and maybe you've taken a few option courses and you have some money set aside to trade options, income generating options. Maybe you have a portfolio of just good dividend paying stocks, and then you have some money set aside to trade a little bit more actively. And this is that type of an approach here, okay? Number one, they're realistic. They know that there's no magic pill that they're going to take that will make them millionaires overnight. Success in this industry, and really any industry, comes with time and effort. So if you ask anyone who's ever gotten to the top of their field, right? You ask a CEO of a company or a pro athlete or a foreman at a construction site, they weren't just handed the job. They put the time in, they put the effort in, and it paid off. Okay, they'll tell you that it did take hard work. It didn't happen overnight, and it's not going to happen overnight for you either. I hate to break it to you, but it's making money in the stock market, learning how to make money in the stock market takes time. And it's going to require some effort on your part. Next is that they control their emotions. This is easier said than done. All right, this is something that might be holding you guys, some of you folks, back. Professional traders, they don't allow losing trades to affect them. They don't think of the money first. They focus on doing the right things, making the right trades, and they know if they do that, the money will follow. So this is really a very important part of becoming a very successful trader, is not allowing cluster of losing trades, 3, 4, 5, maybe 6 losers in a row to get to you, because that's going to affect your decision making moving forward. It's going to affect your confidence, and you're not going to get anywhere. You're not going to turn the corner if you allow a series of losing trades to affect your decision making. One of the reasons that they are able to do that, control their emotions, is because they place trades based on facts and data rather than a gut feeling. They're not buying stocks because their Uncle George told them, hey, I got a good stock for you, or somebody at work said you should go out and buy this stock. But we've all been there. I've been with VectorVest now almost 15 years. Earlier on in my career, I didn't know anything about the stock market. I obviously didn't know anything about VectorVest, and I would buy stocks just for really no apparent reason, very arbitrary reasons. So we've all been there, and the feeling that we had was the reason that we bought the stock. Pros don't think that way. They don't incorporate feelings or emotion into trading. They look at the data that's in front of them to help them make a decision. I love this slide. They're prepared. They know exactly when they're going to get out of a trade, even before getting in. And the reason why I like this slide is because you board an airplane, and as the airplane is pulling out of the gate and taxiing on the runway, what does the flight attendants do? They walk you through what to do in case of an emergency. Basically, they're telling you how to exit the plane even before you're taking off. Okay? And pros have examined and tested different techniques to figure out which one is best. That's how they know. So I kind of pose a rhetorical question to you guys. Do you know exactly when you're going to get out of every trade that you place, even before getting in? It's a rhetorical question. Think about it, because that's what pros understand. I know exactly when I'm going to get in, and if things go the other way, I know exactly when I'm going to get out. And they know all that stuff because they've tested multiple variations of exit criteria for the technique that they're developing. It's not arbitrary. It's not, I'll just get out here, because I don't want to take more than a 5% loss. It's based on the system that they've developed to help them determine when they're going to get out. And lastly, and most importantly, I think professional traders are disciplined. They stay sharp and focused when things are going well, and resilient when they're not going so well. And this goes back to, I think, point number 2, where they're able to control their emotions, both when they lose on a trade and when they win on the trade. They don't get overly excited. Okay? They just they stay very even-keeled, focused when things are going well, but they're able to bounce back quickly when things aren't going so well. So they have a plan and they stick to it. Now, if you're someone that struggles with one or two or multiple more than of those things, what happens if you continue to struggle with them? you're going to go broke. Now, I don't mean you're going to be, unemployed living on the streets, but you won't be playing this game too much longer. The money that you're setting aside to trade like this, to trade a little bit more actively, you're going to see that account, um, you know, uh, diminish quite rapidly if losses will just keep building up and building up and building up. If you start doing things the right way, addressing some of those things, you'll know exactly what you're doing no matter the situation. So just think about the confidence that you'll have. And once you start to develop better habits, you will start to see more consistent gains. Now, there's a big mistake traders make when first starting to implement short-term trading strategies. They follow unproven, complicated strategies. For some reason, they feel like they need to use 5 different technical indicators and 3 different types of moving averages, and they'll throw Bollinger Bands on the chart. For some reason, new traders who are just starting out trading this way, they find value in complexity. They think that because you have so many indicators on the graph, you got a solid system in place. It can lead to quite the opposite, actually. You're gonna get confused. You're gonna get frustrated. You're gonna get mixed signals. Some indicators tell you the same thing. For example, stochastics and RSI, very similar indicators. There's no need to use them both in a trading system. Okay. What I want to show you today is something called the RSI2 trading system. RSI2 system, excuse me, was developed by Larry Connors. You may have heard of Larry Connors. He's an author. He's a trader. He's written a lot of books on trading. He has over 30 years in this industry. This strategy focuses on stocks in long-term uptrends, but are experiencing short-term corrections. So what exactly does that mean? That's okay on the surface. What exactly does that mean? He defines it very clearly. And what I love about this system is that it's so simple. It uses 3 indicators, not 5, not 7. It uses 3 indicators. A 200-day simple moving average to identify the long-term trend. In other words, if price is above the 200-day simple moving average, the stock is in a long-term uptrend. And a 5-day simple moving average and the 2-period RSI for the short-term trend. RSI stands for Relative Strength Index. And today we are going to be looking at daily charts, not weekly charts, not intraday charts, daily charts. So it's a 2-day RSI. If it were a weekly chart, it would be a 2-week RSI. So it's a 2-period RSI. And again, we're going to be looking at daily charts only. All right, so here we're looking at Procter & Gamble. Now this is from November of 18 to November of 19. Don't worry about the time frame here. I'll explain why I went back this far, and I'll show some more recent examples in a moment. But overall, during this time frame, it's a great stock, right? It goes from bottom left to upper right. But there have been times where the stock pulls back, stays above the 200-day moving average, long-term uptrend, but falls below the 5-day moving average. That's the white line running through price. Short-term correction. Okay, so you hear it stated as it focuses on stocks in long-term uptrends but are experiencing short-term corrections. It's clearly defined here. It's not arbitrary. These are the indicators that he's using to identify both of those situations. Now the other layer to this, the other indicator that's used is RSI, Relative Strength Index, and that's the green indicator at the bottom. RSI is scaled between 0 and 100, with the industry standard look-back period is 14. Okay, so what I'm doing here is I'm just introducing you to the RSI and its industry standard look back, which is again 14, where the lower level is at 30 and the upper level is at 70. The oversold level below 30, the overbought level above 70. And you can see, and you can plot this on any stock over time, showing the RSI movement. Now, using the industry standard setting of a 14 period look back, you can see that the RSI fell below 30, which is a setup, which is a signal, only once. Now remember the chart we were just looking at, I went from November of 18, which is where my cursor is here, to November of 19. And the RSI, 14 period RSI, didn't fall below 30 at all. Okay? So it didn't give you any signals. But it's great buy and hold stock, but not for this trading system that I'm about to show you. Now, I had to go back to October of 2018 to show you when the 14 period RSI fell below 30. Great buying opportunity, don't get me wrong, but the slower the signal, the longer the look back period, the slower the signal and the less signals that you'll get. What Larry Connors did was he sped up the indicator and he changed the look back period to 2. Okay? When you do that, you also have to adjust your extreme levels. So he changed the look back period to 2 and he lowered the extreme oversold situation from 30 to 10. It's a faster signal. Okay? And as you can see, it produces much more signals. So here's your system. Here's your setup. Okay? Along with the price of the stock, above the 200-day moving average, with the price below the 5-day moving average, and the 2-period RSI below 10. There's your trade. Okay? Price above the 200-day moving average, long-term uptrend, but below the 5-day moving average, and not or, and the 2-period RSI below 10. There's your setup. All right. Let's write this down on paper. Let's take a look at what it looks like on paper. So here are our entry rules. We buy only when the stock is above the 200-day simple moving average and below the 5-day simple moving average with the 2-period RSI below 10, and we are going to enter near the close of the day. When I trade this system, I enter at about 3:55 p.m. Eastern Time. Richard says, why is it a 200-day and not a 100-day? You'd have to ask Larry Connors that question because that's how he created the system. I'm going to guess and say it worked better than the 100-day because I'm sure he tested so many different combinations of moving averages with this system. But what he published and what he came up with was the 200-day moving average, which again is, I'm sure, worked better than the 100-day. Okay, we are going to enter near the close of the session, and again, I trade this system, and I enter at about 3:55 p.m. Eastern Time. I put a market order in. I don't mess around with limit orders because I want to get in. I want it the trade to execute, and you run the chance of it not filling with a limit order. You're welcome, Richard. Okay. So we are going to enter near the close of the day when we see the stock above the 200-day moving average, but about to close below the 5-day moving average with the 2-period RSI below 10. We are going to enter near the close of the session. We are going to exit. Remember, we know before we get in when we are getting it out. And that's going to be when price goes above the 5-day simple moving average. Remember, we're entering in when it goes below it. When it's about to close below it, we're getting in right near the close. We are going to exit when it's about to close above it. And we are going to exit near the close of that day as well. Okay? 355, 350, 355, put a market order in, and you get out of the trade once you see price closing about to close above the 5-day moving average. Okay, so now I want to emphasize this. You see where it says exit criteria. It doesn't say stop loss. Larry Connors he developed a system not using stop losses, and I'm using air quotes when I say stop losses, because he felt that stop losses hurt performance over time. Okay? It's an exit criteria. You will exit always when price goes above the 5-day moving average. And I'm going to show you guys some examples here. Okay? So Procter & Gamble, here's the same stock we were looking at. Now remember, we were looking at the long-term chart from November of 18 to November of 19. We saw that the price of the stock was above the 200-day moving average the entire time. Right? However, when I zoom in, because I wanted to zoom in here to show you guys a closer look, we lose that purple line. We lose that 200-day moving average. But I want you to understand and know that the price of the stock for every example that I'm about to show you is above the 200-day moving average. Okay, so on this day, July 23rd, 2019, okay, Andrew says, can the exit be entered ahead of time as an if-then type of order? No, it can't, because you don't know when it's going to cross above the 5-day moving average, and you don't know what price it's going to cross. So you can't enter it in when you buy it. Okay, because again, you don't know when it's going to happen. Okay, so on July 23rd, 2019, we have a signal, right? Price is above the 200-day moving average, but it's pulled back a little bit and fallen below the 5-day moving average and the 2-period RSI below 10. We are going to buy near the close of the session. Now, for the purposes of my examples here, I am going to use the close of the day as my entry price. Why? Because I don't know what the price was on July 23rd of 2019 at 3:55 p.m. Eastern Time. So I'm trying to get in as close to the close. There's going to be not much slippage, right? Because we don't have to pay commission anymore. Most brokerages now are not charging commission for online trades. That's not a factor anymore. And you're getting in so late in the day. Volume is rather heavy that late in the day, so you know you're not going to see too much slippage. You want to get in right as the stock is about to close. So we have ourselves an entry here. We buy it at 113.85. Again, that was the close of the day. How do I know that was the close of the day down here and not up here at the top of the body? Because it's a filled candle. It's a solid candle, meaning the close was at the bottom of the body and the open was at the top of the body. An unfilled candle means that the close was at the top of the body and the open was at the bottom of the body. Okay, so I'm entering near the close of the session at 113.85. I sell 3 days later at 114.73. Why do I sell on that day? Because on that day, July 26, 2019, at 3:50 to 3:55 p.m. Eastern Time, I see that the price of the stock is about to close above that 5-day moving average. So I'm exiting. All right, that's a winning trade. It's not a home run, okay? It's a winning trade. I want you guys to focus on winning trades here. And earlier I asked you to take out a pen and a piece of paper. If you guys don't mind, do that please now, because I want you to tally wins and losses, okay? That's a win. Put a tally mark in the win column. The next day, we have another setup, right? Are the rules true? Are all the rules met? Is price still above the 200-day moving average? Yes. Is it about to close below the 5-day moving average? Yes. And is the 2-period RSI below 10? Yes. Now, I'm not saying that if you bought the stock the day before, that you would buy more of it the next day. What I'm showing you, and what I'm going to continue to show you, is every single setup, every single opportunity. Now, if you didn't buy it the day before, for whatever reason, you didn't have enough buying power left, you were sick, you didn't watch the market, you were on vacation, whatever the case may be, you didn't buy Procter & Gamble on July 23rd, but you did see on July 24th that it showed that it had another setup. So here in this case, we buy it at 113.15. We sell it a couple of days later at the same exit of 114.73 because we see that price is about to close above that 5-day moving average. All right, that's another winning trade. And I'm moving from left to right on the chart. I'm not cherry picking dates. I'm not skipping over setups. So the very next setup after the July 24th one that we just saw was not until August 5th of 2019. Price is still above the 200-day moving average, but below the 5-day moving average and the 2-period RSI below 10. Now, why didn't we buy it the day before? Didn't price close below the 5-day moving average, right? But the 2-period RSI was not below 10. It wasn't in that extremely oversold situation. So here we buy it at 113.08. We sell it 2 days later at 115.52. Nice little quick gain in 2 days. I told you guys this was a short-term trading system, didn't I? Now the average holding period is anywhere between 2 to 5 days. Okay, now that's the average. Could be longer, could be shorter, meaning you could sell it the very next day. It's not a day trading system because you're buying it near the close of the session. Now you could sell it at the earliest the very next day. Okay, but on average, the average holding period is 2 to 5, 2 to 6 days. By the way, I'm going to show you guys or explain how you can use the VectorVest system to find these setups. Okay, so that's another winning trade. So put a tally mark in the win column as well. I think that's 3 so far, right? So the very next one was September 10th of 2019. Price is still above the 200-day moving average, but about to close below the 5-day moving average. So it's in a long-term uptrend, but it's experiencing a short-term pullback, a short-term correction. Price about to close below the 5-day moving average, the 2-period RSI below 10. We have a setup. We buy it at 119.88. We sell it at a nice gain there. That's a nice trade. 122.77 is our exit. Price is about to close above that 5-day moving average, so we exit the trade. Okay, that's another win. The next one was October 2nd of 2019. Price is still above the 200-day moving average. I can't emphasize enough how important that is, right? Because pullbacks within an underlying trend are more likely to be just pullbacks, as opposed to the beginning of a downtrend, of a beginning of a long-term downtrend, or the continuation of a downtrend. You have to be in an underlying environment, underlying uptrend environment. It's okay to buy stocks that are pulling back, and traders, that's what traders do. You know, there are momentum traders that are buying stocks that are just flying. And then there are regression traders that are buying stocks that are pulling back. You've heard the term before, buying the dips, right? So that's what we're doing here. We're buying the dips. We're buying the dips with a very systematic, rules-driven approach, as opposed to, I like this stock. It's been going up, but it's pulling back a little bit. It's pulled back, $6 off of its high. I think I'm getting a bargain. I'm going to buy it, without really understanding what's going on and allowing indicators to tell you that it's okay to buy the stock, as opposed to, kind of, again, an arbitrary entry. Look, you are getting a bargain from its recent high, but the stock can continue to move lower, and it's not really a systematic approach. So here, on October 2nd of 2019, we got another setup. Price is still above the 200-day moving average, below the 5-day, and the 2-period RSI below 10. We buy it at 121.08. We sell it a couple of days later, near the close of the session, at 124 even. Now, the stock opened below the 5-day moving average, crossed above it during the day. We're not exiting just because it crosses above it. We are exiting as we see it close, or about to close, above the 5-day. Can't get much better than that. You're selling it basically right off of the high of the session. Okay, so that's another winning trade. All right, I think we're 5-0 so far. And again, I'm just moving from left to right. Now, here's October 14th of 2019. We got another setup. Price is above the 200-day moving average, so it's still in a long-term uptrend, but it's pulled back enough, causing the price to go below the 5-day moving average and the 2-period RSI below 10. We buy it at 120.05. When do we sell it? 1, 2, 3, 4, 5 days later at $119.08. You're thinking, well, that's a losing trade. And you're right, that is a losing trade. So remember earlier I said, don't think of it as a stop loss. It's not a stop loss, it's an exit criteria. You are exiting always when the price of the stock is about to close above that 5-day moving average. Now, what we've seen up to this point, we've seen all winning trades. You're not going to get all winning trades. There are times where you're going to experience a losing trade, but you're still following the system. You're still going to exit no matter what when price is about to close above that 5-day moving average. So this is a losing trade. James says, can you actually see where the RSI is at 355 before the market closes? Yes. Yes, you can. Okay. So the very next day, we have another setup. Okay, now again, I'm not saying that you're going to buy more of it if you bought it the day before, but I'm showing you every setup. Now this setup, we buy it at 117.20. We sell it at 119.08. Now that's a winning trade. Okay, that's a winning trade. The very next day, or I'm sorry, 2 days later, we have another setup. Now, we didn't have a setup here on October 16th because the 2-period RSI was not below 10. Yes, this is a daily chart. So it's a 2-day RSI. Okay, it's not an intraday chart, it's a daily chart, so it's a 2-day RSI, as opposed to an intraday chart looking at 1-minute bars. It'd be a 2-minute RSI. So we didn't have a setup the day before because the 2-period RSI, the 2-day RSI, was not below 10. It was on October 16th. We buy it at 116.63, and again, that's saying if you didn't buy the previous 2 days, what I'm showing you is setups. You're welcome, Jim. We sell it 2 days later at 119.08. That's another winning trade. So I think we have something like 7 wins and 1 loss from July of 2019 to October of 2019. That's a very small sample size. Okay? So what I decided to do was I decided to go all the way back to November of 2018 and do that same analysis all the way to current, because I knew that a 3-month sample size with 8 setups wasn't enough to kind of make you a believer, if you will. Okay, so I needed a larger sample size, and I went back to November of 2018 to current. That includes March and April and February of this year. Over that, let's call it 2 years, we're looking probably at 23 months, right? 22, 23 months. There were 28 RSI2 setups. That's maybe 1 a month, you know, just to kind of keep the math simple, okay? There were 25 winning trades and 3 losing trades. That's an 89% winning trade percentage on that one stock. What is the most important characteristic of the stock of Procter & Gamble? It being above the 200-day moving average practically the entire time. Now, in February and March and April and May and June of this year, you're probably saying, well, 25 winners and 3 losers, that doesn't seem right. There must have been a ton of losers during this period. And there weren't a ton of losers during this period because there weren't any trades during this period. There weren't any setups. Why? Because price was not in an underlying uptrend. We don't take the trade unless the price of the stock is above the 200-day moving average. There were pullbacks, right? There were times when price crossed below the 5-day moving average and the 2-period RSI went below 10, but those aren't trades that we're taking because that is not a high probability setup. It's not a high probability trade. The high probability aspect of this trade, of this trading system, comes in when the price is above the 200-day moving average, because those pullbacks are likely to be just short-term corrections, short-term pullbacks. Okay? And recently, out of those 28 setups, there were actually 2 of them recently, okay, that both resulted in a winning trade. So actually, let me pull up my VectorVest real quick. I'm going to show you guys real quick the most recent. Okay, here's of those 25 winners, 2 were recently. Right here on September 8th. Price above the 200-day moving average, excuse me, but below the 5-day moving average and the 2-period RSI below 10. We buy it near the close of the session at roughly 135.94. We sell it a few days later at 138.14. You can see that it closed at 138.14. The 5-day moving average price was 137.38, clearly above it. We exit near the close of the session. That's a win. Here was another trade. September 21st, just this week. Was that Monday? Yeah, Monday. We buy it at roughly 136.71. Price is still above the 200-day moving average, but it's about to close below the 5-day moving average and the 2-period RSI below 10. Here we sold it the very next day, right, at 137.96, because price closed above the 5-day moving average. We are entering and exiting as near, as close to the close as possible. Okay, so that's just one stock. What you're looking at here is a trading system, is an automated trading system that centers around the RSI2 entry criteria that I just taught you. What is the entry criteria? Price above the 200-day moving average, but below the 5-day moving average and the 2-period RSI below 10. This trading system that you see, this automated system, uses that exact same criteria to enter at the close of the day. Now, the difference here between what you're seeing here and what I just taught you is the exit criteria, and it's a subtle difference, okay? Because we don't have a way, unfortunately, within the confines of the VectorVest program to automate close a position when price closes above the 5-day moving average. We don't have a way to automate that. So I had to use what we have in the VectorVest program. Okay. Carl says, does this require VV intraday or can it end of day be used? Well, you can't use end of day, right? Because you have to see where price is at the very end of the session. So really, I mean, you really need real time for it if you really want to get in at 355. Now, intraday, you're going to be a little bit behind. You're going to, you'll wind up getting in a little earlier. Okay, maybe 340 or so, or 335. But this trading system is up 586% with 93% winning trades over this 10-year period. 207 winning trades and 15 losing trades. That's a 93% winning trade percentage from February 8th of 2010 all the way basically to current, just Monday of this week. Okay, Ricardo says end of the session is 4 p.m. not after hours, right? Correct. 3:55 p.m. Eastern time. That is the end of the regular trading hours. It's up 586%, 93% winning trades. That's 207 winners and 15 losing trades over 10 years. I've done a lot of back testing over the years, and I've never seen a winning percentage like that before, with results that that correlate to what we're looking at here. So you may be thinking, all right, this is pretty fantastic. I don't have time though to look at all these charts, right? If you're telling me that I have to enter and exit near the close of these sessions, then you're probably thinking, I have to go through hundreds of charts just to find a handful of candidates. Well, what I'm about to tell you eliminates all of that time, okay? No matter what we teach you here at VectorVest, we want you to be able to do it faster, smarter, and better. I'm going to take a few guesses as to why you guys are here today. You tuned in today, the title of the webinar was called How to Trade Like the Pros. So you figured I'd be teaching you guys something about how pros trade, right? Jim says, what was the name of the author of this system? Larry Connors. His name is Larry Connors. You want to take emotion out of your trading. And again, this is something that might be holding you back. Getting frustrated over and over again affects your confidence. If you think of any professional athlete, baseball players get into hitting slumps, right? Well, their confidence is shot because they haven't made contact in a while. Okay? Now, maybe you're not where you want to be. And the obvious question that you're asking is, all right, this sounds pretty interesting. This is something that I've been looking for. I don't know when to get out of a trade. Buy-in is easy. Exiting is the hard part. So you're asking, how can I take my game to the next level? Well, you have a choice. You can do it by yourself. Maybe take bits and pieces of what I taught you here today, or let us just kind of give you the answers. And that's why we put together a 6-session webcast series where we teach you techniques from 3 of the very best professional traders in the industry, Larry Connors included, and I'll get to another system in a moment that we teach during this webcast series that he developed. Okay, you're going to learn top trading strategies of the pros and how to quickly and easily identify the best trades. I hope you saw that if you learn to implement strategies like the one I showed you today, you'll achieve the success that you're looking for. Now this right here is Hugh. Hugh is a recent graduate of one of our Trade Like a Pro courses, and he sent me an email not too long after the course was over. He said, I'm a retired financial services executive, so I had to unlearn what the quote street teaches to start making money. Before taking the Trade Like a Pro course, I found it was difficult to stick with a system since there were too many variables. I never could achieve the short-term trading success I sought. After taking the course, I began to see results right away. I now have a successful approach and I'm much more disciplined with my trading. So here is what we teach you guys over the course of 6 modules. By the way, I don't know if you guys have taken a digital, one of our older courses, right? A digital chalk course where we would leak out 1 module at a time and you'd have to wait 6 weeks to watch the 6th module. That's different now. Those days are over. With the new VectorVest University, it's essentially like Netflix where everything is on demand. So you'll get all 6 modules right away. All right, and I'll talk about all the content and exactly what you'll get here in a moment. But the first module is all about correcting your mindset, getting you in the right mindset to trade this way. And we'll talk a little bit more about how professionals think, about managing risk, and a really important segment in this first module is order entry. And then we get into trading techniques. In module 2 is about bullish and bearish candlestick reversal patterns. I love trading candlestick reversal signals. They identify changes in sentiment, and we go through that underlying investor sentiment that candlesticks actually provide to us. You know, the difference between where the stock opens compared to where it closes and how far off the highs and lows the close is compared to the previous day is really important. You know, candlestick analysis has been around for hundreds of years, and these signals are really, really effective in identifying turning points. We're going to teach you the correct indicator to use and how do you know that you got it right. In module 3 is called Gaining the Trader's Edge. We teach you the different types of market environments that you will run into. Trending markets, channeling markets, extreme markets. We'll teach you how to recognize those markets and then the correct indicator to use in that environment. And then we get into our first professional trader's technique. Steve Chappell and I will be your instructors, are your instructors for this course. And he teaches a system called the Holy Grail. This was developed by Linda Rajke. Steve teaches you this system, and she developed this technique for both bullish and bearish markets. It's a very short-term system. Now, module 5, we kind of slow things down a little bit in terms of the holding period, if you will, for these systems. Charles Schaap is a professional trader who developed these systems, one called the 50-50, the other called 80 Excellence. These are a little bit more intermediate term, not as short term as the Holy Grail, definitely not as short term as the RSI-2. And in module 6 is, I believe, what is the highlight of this course, and it is more on Larry Connors. We'll show you guys more on the RSI-2 system, and also a system that he's developed for ETFs. Maybe you're kind of you're searching for a system for ETFs. He developed one, a really good one, using relative strength index for both bullish and bearish ETFs. Okay. Thank you, Jim. I appreciate that. I'm going to hold off on reading that, but Jim says this is the most informative webinar he's ever listened to. Awesome. Yes, Sanjay, I will put those slides in a moment. Sanjay's asking, do you teach in the second module about all types of candles and their impact on price? Well, let me say this. We teach bullish and bearish reversal patterns. 2-bar patterns. Now there are 3-bar patterns, there are 4-bar patterns, there are 5-bar patterns. Actually, there's 1-bar patterns as well. Hammer, hanging man, dojis. We teach you 2-bar patterns. Okay, so I can say that. Now, as a bonus, this is a special bonus. We're going to give you this course. This is a 6-session webcast series. So I just mentioned that in Module 2, we teach you a couple of different bullish and bearish reversal patterns. This is an entire 6-week session, okay? 6-week course on bullish and bearish patterns. We teach you one white soldiers and black crows and hanging man and hammers and dark cloud covers and piercing patterns. You know, so this is a very thorough, comprehensive course on candlestick reversal patterns. This is valued at $995. You can go, into the VectorVest University right now, buy it for $995, or we're going to give it to you free as part of the Trade Like a Pro course. Now, as another bonus, okay, we're going to give you also, Steve and I, 6 live mastery support sessions. Remember, the modules that I just went through, those 6 modules are pre-recorded. We're also going to offer 6 live mastery support sessions, and in a moment I'll go through the dates of when those sessions will be held. But these sessions are great. These are designed to help you implement the things that you've learned in the course. We'll take a look at the things you're doing. Steve and I will be giving you guys homework assignments. We'll go over those homework assignments in the mastery sessions. And what I love about these too is we look at the current market on that day. So the modules teach you the technique, and we teach you the technique on historical examples, right? We want you to learn the technique, when to get in, where's your confirmation level, where's your stop loss levels. So we look at historical examples to do that. In these mastery sessions, we look at real-time examples. We go through the charts. We say, okay, this setup looks good. This is exactly the ideal setup that we're looking for. So this is something that Steve and I have been doing a lot in these live mastery support sessions, is looking at real-time examples. Speaking of real-time, if you don't already have VectorVest real-time, maybe you have our end-of-day program, maybe you have our intraday program, we're going to give you 60 days access to the VectorVest real-time program. And also, as another bonus, we're going to give you a live, or I am actually going to be delivering a live trading session. This is where we actually will implement everything that we learned over the course of the 6 weeks. We're going to wrap everything up. I'm going to step you guys through everything from market analysis to trade setup to trade execution. And here's the best part, and I know a few of you guys were asking, exclusively for workshop attendees, you're going to receive pre-built scans that will make finding these setups a breeze. This whole time you were probably thinking, well, great. They teach us all of these great systems. How on earth am I going to find trades, right? Well, I've already done the legwork for you. I built these scans to quickly and easily find the best candidates to trade. And the great part about this is they're going to be inserted into your programs. You don't have to build them yourselves. If you're someone that's not too up on building scans in the Unisearch tool, you don't have to worry about that. We're going to automatically insert these programs, these searches to you, so you don't have to build them. Okay, finally, the last bonus, if you will. We're going to give you guys this trading system. This automated trading system, again, that centers around the RSI2 system, that over the last 10 years is up 586%, with 93% winning trades, 207 winners, 15 losers. There are a lot of variables in this automated system, okay? You're going to get this automated system as well. Now, the normal price for this course is $29.95. The early bird rate is still available. Early bird rate is $24.95, but I want to kind of, as a thank you guys for being here on this webinar today, I'm going to knock an extra $200 off. So I'm going to ask Todd, if he doesn't mind, to type in that address that you see at the bottom there, www.vectorvest.com/TLP. And this $22.95 rate will be available for a little while longer, okay? It's not going to be available for all that much longer, but it'll be available for a little while longer. I want you guys to have the opportunity to register for the course for the special $22.95 rate. Remember, thank you, Todd. You guys should see that in the chat box there. It's www.vectorvest.com/TLP. Thank you, James. Yes, James says, what's the elite price? The elite price is half off the regular rate, so the elite price is $1497.50. That if you are an elite subscriber, you got a really good deal, 50% off the regular price, so it's $1497.50. Don't forget, this is another big bonus here. This course we sell separately for $995. You're going to get it. So what is this course about? There are 6 modules. There are 6 mastery support sessions. Now they're not going to be live. They're recorded from the last time I delivered this course. And there's also a live trading session as well. I'm sorry, not live trading session. There's also a trading session that we did, the last time we delivered this course. So you're going to get all 6 modules here, all 6 of the mastery sessions that we did, and the trading session as well. Now, once you guys register and you get immediate access to the VectorVest University, you'll notice that you don't just only have access to the 6 modules of the Trade Like a Pro course. You will be able to watch the mastery sessions that Steve and I did a few months back. Those were recorded. Okay? Now, those mastery sessions will be replaced with the live ones that we do. So anytime that we record brand new content, we immediately upload it to the new university. But in the meantime, okay, you will be able to watch a ton of content before our first mastery session, which is going to be on October 14th. Okay, they're going to be held on Wednesdays at 2 p.m. Eastern Time. The first one's the 14th, and by the way, that October 14th mastery session will only cover the content that we taught in Module 1. We're not going to skip around. We're not going to start talking about the RSI 2 or the 50/50 in Module 1's mastery session. You will have the opportunity to watch all of those modules, but we're going to take things a little slow, and we're going to cover the content week by week, that was covered in the modules themselves. Okay, and here is the date for the live trading session. This is going to be Tuesday, November 24th. This session starts at 8:30 a.m. Eastern Time. Okay, and you're probably asking why so early? Well, there's a lot of work that needs to be done, right? We have to run through market analysis. Are we bullish or are we bearish on the market? If we're bullish, okay, let's run our scans, all those scans that you guys will get. Let's run the Holy Grail. Let's run the 50/50. Let's run the 80 Excellence and bullish candlestick patterns. And let's look at the charts and identify the ideal setups and set up our watch list and understand where our confirmation levels are, where our stop loss levels are. We check the futures. There's a lot that's done before the market opens. Okay, and that's why we go through all of that at 8:30. Now, a lot of what we do in this session can be done the night before, okay? But we're going to do it an hour before the market opens so that when the market opens, we're ready to go, okay? All right, guys, I'm going to stick around. Thank you, Todd, man, for being here and answering questions. I want to thank you guys for some really nice comments that you guys have been put in there. I really appreciate that. Any other questions, guys, before I wrap things up? Oh, by the way, I put in the handout section of your GoToMeeting control panel that PDF. It's the slides that I used today. You should just see it says TLP, and it's a PDF. It's in there for you guys. All right, let's see. Andrew says, what is the average dollar spread between wins and losses? That I don't know, Andrew, because there's no way to automate any of the systems other than that RSI-2 system. Okay? All the other systems are cherry-picking systems. Okay? So I don't have an empirical, I don't have a dollar amount say this is how much money you should expect to make each year using the Holy Grail. There's no data out there available, and there's no way to test it. Okay? All right, Ricardo, good. I agree. That's awesome. Glad to hear that. Now the RSI2 is automated. Remember, you're going to get that automated trading system. I can say that over the last 10 years, 55% a year, that's what the average rate of annual rate of return was. And over the 10 years, you're looking at 93% winning trades. Okay? And all the systems that I've traded with the RSI2, that's what I'm looking at. I'm looking at between about 85 to 95% winning trades. I got you, Andrew. It's hard to tell. I don't know how much money you're working with, right? How much you're putting in. Is it a 50 grand? Is it 20 grand? Obviously, the more you put in, the faster it'll be before you make up the cost of the course. So it's just hard to tell. Okay. You're welcome, Ricardo. I appreciate it. All right, guys. Well, you guys have a great evening. I enjoyed today. I love giving this webinar. Steve and I, this is our favorite course to teach. We'll say that every time we teach it, and it's true. It's our favorite course to teach. We're both, in the swing trading faction, I guess, if you will, of the education department. We do a lot of courses on swing trading. This is our favorite. Okay. Have a great evening, everybody. Have a great weekend, and I look forward to working with you. Take care, everybody.